Right now, a very high quality signal is forming in gold for short-term speculative trading. In this video, I want to show you how to trade it correctly so that you can make good money over the next week. Let's move to the chart and we'll immediately figure out what's actually happening right now. The first thing I'd like to start with is, well, the levels where we saw a halt. During the market decline, I identified the volume zones that were most important for us. And actually, the initial growth and its halt around 24.80 per ounce of gold was right at the accumulation boundary. And then we started returning directly to the same levels that were reached earlier. Accordingly, we had one intermediate zone, which turned out to be the end of this entire correction. But for control, verification, and price tracking, I use Pitchforks. As it moves outside the pitchfork, confirmation appears that our current downward movement is complete. So the first thing we can determine right now is that the downtrend is ended. We don't know yet what lies ahead, what the growth pattern will be, and so on and so forth. So for now, we're just talking about the end of the downtrend. I often talk about one very important thing in my videos, analyses, and various educational clips. When a reversal occurs, it's very important to get an additional three-wave pattern as confirmation. Actually, this pattern is very similar to the famous cup and handle, which gives us a signal upon breakout. And right now, if we switch to the lower 30-minute chart, we can see that the three-wave pattern we need has already formed, and we've got a breakout. So if we try to break down the movement into smaller components, that is, build an additional set of pitchforks, will basically get the exact same breakout, confirming that this cycle is complete. This means the next stage is beginning. I don't plan to show silver in this video, but yesterday silver showed a good uptrend of about 7% growth and is what's called a leading asset. So gold is catching up, and you can actually make extra money on gold if you haven't entered silver yet. And now we have two answers. First, the downtrend is over, the reversal is confirmed, and the local correction we had has also finished. So it's time to enter. Regarding entry, I always use a three-wave pattern, and the level of 23.49 is our entry point. So if you haven't entered yet, now's the time. The stop loss is placed at the low of our correction. This is the 4,647 level, or 4,650 if rounded, where you can set it and then hold the position. So what's ahead of us? Ahead, we have the nearest resistance zone, which is that same level. The one where we stopped last time, which is actually the level from back in April. And in this case, I want to point out that on the second attempt, the probability of breaking this level is much, much higher. Now, about the targets. How far will we grub? And here, it's important to understand my higher time frame markup that I've already published. It has, essentially since probably the month of January. It hasn't changed at all. I keep repeating the same thing. Currently, the main scenario is continued growth, with gold hitting new highs around 6,500, just like the other metals. And likely, one of the scenarios, which is now the primary one, is that the correction could be completely over. Meaning, we're seeing a situation here where waves 1 and 2 have formed, and we're starting to actually accelerate. This scenario is possible. It's the main one right now, and we're picking our trade based on it. But there's an alternative. If you watch my video on oil, the probability of a triangle forming exists not just there, but in metals too. So they'll move asymmetrically in opposite directions, and even though we visually see the same triangle, pointing towards a downward movement, I want to tell you that one of them will be fully realized, either in metals or in oil. And that's the main trade where you can make some very good money. But what's important here is what they have in common. Right now, unlike with oil, where we chose one scenario or the other to decide whether to go long or short, here we have a target range. So the 5,100 to 5,200 levels are key for us, regardless of what we're dealing with. If it's a triangle, then that's the target zone for wave C, and we'll finish our move there. after which the decline will begin, continuing the triangle formation. If we form an uptrend, which is the main scenario being considered, then as we approach the 5100 to 5200 level, we'll see consolidation. And after that consolidation, a breakout further up. So the safest trade to take soon is from current levels up to 5100 or 5200, then monitoring it or taking profits and potentially re-entering once it hits new highs. By then, I'll have time to release a fresh video and give you a more detailed commentary on what's happening at that point. That's all for me. Bye.